we continue in the process. Let us move to what is called as the 12th transaction. If I move to the 13th transaction, if I move to the 13th transaction says sold goods for cash to Pataudi. When I said sold goods for cash to Pataudi, what is journal entry I made? I made something called as cash account debited to Pataudi's account. You can go back and check. We said that cash account debited to sales of Pataudi's account. Cash account debited, we are not even worried about to whom. If you go back, you can actually see, we will say cash account debited to sales is the journal entry. That is basically what we made in this particular case out here. Cash account debited to sales, that is about roughly about amount was something around 900, yeah, cash account debited to sales, that is what we basically made out here. This is what you will actually see in this particular case. Now let me take the same journal entry and let me try and see if I can post it out here. If I have to look at posting it out here, what happens is sales account debited in the process, sales account debited to what is called as in this particular case, in this particular case cash account debited to sales out here, sales account has been credited by cash, how much, that is sales to Pataudi in this particular case is 900 out here. Now in this particular case that is done. So that means what is happening, the other account that is getting affected in this particular case is basically cash account in this particular case to sales, that is 900 out here. Move on further, I move to the 14th transaction, sold goods to Chandrasekhar on credit. When I said sold goods to Chandrasekhar on credit, if you actually see this 14th transaction, what did we do? We said debtors account debited to what is called as sales account, that is Chandrasekhar's account, debtors account debited to what is called as sales account out here. So what happens, debtors account debited to what is called as sales, what is the amount out here, amount in this particular case is 400 out there, and then I will say I will move to what is called as my I will move to what is called as my sales account. I will say by debtors, that is amount in this particular case is 400 in this particular case out here. Now if I have to know as of this date what is the total sales that has happened, 700 plus 700 plus 600 plus 900 plus 400. Now I will say I do not have to go transaction by transaction to find out what is the total sale, I can rather look at it and then tell me what is the total sales that has happened out there. Now if I have to say what is the total outstanding that is there, that is I have to pay, if I just look at the creditors account, I will say what is the total outstanding, 2000 plus 900 minus 1030 is the amount that is basically outstanding. Now you understand the purpose of doing this general account, that is I need to group all these things together and pull out what is the balance in each of these particular account out there, that is the idea out here. Now the next 15th transaction, if I look at Jayasimha returned goods rupees 20. What is the entry we passed in this case? We passed the journal entry, that is 15th transaction. If you look at the journal entry out here, 15th transaction, if I have to say, if I have to look at what is called as my journal entry out here, my 15th transaction in this particular case, I said purchase returns account in this particular case was $20 out here, sorry, my sales returns account out here, debtors account, that is basically sales returns account basically to what is called as my debtors account out there, that is what is $20 out there. We pass the entry as a sales returns account debited to debtors account. Now what is that happening? Debtors account has been credited basically by what is called as my sales returns out there. Sales returns is basically what is called as $20. Now what is happening? What does debtors balance give you? Debtors balance give you, that is the amount that is due, that is I am eligible to receive. What is the amount that I am eligible to receive? 700 plus 600 plus 400, that is the amount that I am eligible to receive. 1700 is what I am eligible to receive. Out of this amount I have received either in the form of cash or in the form of discount or in the form of sales return. Now what is the amount due? That is this right side of debtor side, the debit side minus the credit side is the total amount of debtors that is receivable as on this particular day. That is what we call it as we are grouping all this, netting all these transactions out here in this particular case. Now 16th transaction, if I have to see, we got 28 transactions, I am at the 16th transaction. It says returned goods to E engineer rupees 100. Now that is basically what is happening, that is returned goods, that is I am doing the return, I have purchased, I am returning the good, and that is what we call it as purchase returns. That is what we call it as purchase returns out here. When I say purchase returns, creditors to purchase returns, what is journal entry we pass? Creditors, that is E engineer, account debited to purchase returns. If you want, you go back and see in this particular case out here. You will see creditors E engineers account debited to what is called as in this particular case to purchase account return credited. So, what do we do? Creditors account has been debited by what is called as my purchase returns. Creditors account has been debited by to creditors account debited to purchase returns rupees 100 out there. Now, the same thing I will have to open what is called as a purchase returns account and a sales returns account. Purchase returns and a sales return account is something which I will have to open out here. In this earlier case I did not do that. Sales return account, I will say sales returns account for the previous transaction, I will have to do the sales returns account, and I will have to do what is called as purchase returns account. If I go back to the previous transaction, it says sales returns account debited to debtors rupees 20. In this case, purchase returns account is credited by creditors rupees 100 out there. Rupees 100 out there. That is, this will tell me consolidated how much of the goods that I am selling is returning. It will tell me consolidated how much of the goods I am purchasing, I am returning. If this amount is obviously large, then you will decide whether to change your vendor or whether you have to do quality control if sales returns is high, if purchase returns is high, whether you have to change your vendor or whatever it is, etc. That is the reason why I am grouping all these transactions out there. 17th transaction, cash purchases rupees 200. All that has happened in this particular case is moment I say cash purchases, that is all that happens is purchases account, that is if you look at cash purchases, what is the entry? Purchases account debited to cash account rupees 200. In this particular case, I just go to my cash account down somewhere out here, cash purchases, that is basically what I did was correct, by purchases, that is about 200 in this process. So, what do you basically by purchases 200. So, what is happening when I say in this particular case the debit side is all the cash balance, whenever you are selling capital is contributed, debtors you are receiving, etc. Moment credit side, the cash that is going out basically is recorded out here. If you go to the next transaction out here, that is transaction number 18, if you see cash sales, moment there is a cash sale, what happens? Cash account debited to sales account out here, that is cash account debited to sales account 375, and then what happens? I move to my sales account out here. I think my sales account out here, I will say buy cash, there is 375 out there. I know what is the total sale, I just have to total all this, that is all. I just have to total all this, and that will give me my total sale in the process out here. If I move to my 19th transaction out here, if I move to my 19th transaction, it says withdrew from bank for office use. Withdrew from bank for office use. What is journal entry we said? We said bank account debited to what is called as cash account, and how much is that amount? Bank account debited to cash rupees 1000. I will go to my cash account out there and say cash account, by basically what is happening is bank account debited to cash out there. So, in this particular case cash account is credited by what is called as by bank out there rupees 1000. Yeah, we come to what is called as the 19th journal entry out here. The 19th entry says withdrew from bank for office use rupees 1000. When you withdraw from bank for office use, what happens? There is a cash that comes in, cash account debited to, there is a bank account, debit what comes in, credit what goes out. So, what is coming in? Cash is coming in, cash account debited. What is happening? Bank balance is reducing, bank is credited. So, what happens? Bank account is credited by cash rupees 1000, and then cash account is debited what is called as to bank rupees 1000. Sorry, yeah, just 1000. So, basically that is the journal entry out there. Now, I move to the next transaction out there, 20th transaction, provided loan to Amarnath. When I provide loan to Amarnath, you go back and check your journal entry, it says cash account and then Amarnath account, basically provided loan to Amarnath. Is it a provided loan? It says provided loan to Amarnath. So, what is happening out here? It says provided loan to Amarnath out here. I am providing loan to Amarnath. So, what is happening? Cash is going out of my business. When cash is going out of my business, what is happening? Debit the receiver, and then what is called as, who is receiving? Amarnath is receiving. Amarnath loans account debited to what is called as cash account. Amarnath cash account has been credited by Amarnath's loan account, that is what you call it as, Amarnath's loan account is another 200 out there, and then I open another account out here, that is what is called as, basically in this particular case I will say another account that is called as loan account out here. The loan account has been debited to what is called as cash out here, to cash out here, and then amount is basically in this particular case amount is 200 out there. Now, I go to the 21st transaction in this particular case. I go to the 21st transaction in this particular case out here. If you go to my 21st transaction in this particular case, it says bought goods from Savdega, Savdega, Savdega rupees 300. When I say bought goods from Savdega rupees 300, what is the entry? It basically purchases account debited to creditors account out here in this particular case. So, what happens? I go to my purchase account out here, and then purchase account debited to what is called as my creditors out here, and then creditors is 300 out there, and then what is happening? Purchases account debited to creditors account, and then I just go to my creditors account there, and then I say it has been credited by purchases out there Savdega. How much is it? It has been doing by 300 out there. With you on this. Now, I move on further. In this particular case, I move to the 22nd transaction. I move to the 22nd transaction. 22nd transaction says sold goods to Tankad for cash. When I sell goods to Tankad for cash, what is the entry? Cash account debited to sales account out there. So, what happens? My sales account has been credited by cash out there. What is the cash out there? In this particular case, cash is 400 out there, and then my cash account out there, if I will just go to my cash account in this particular case, and then my cash account in this particular case, you will say to what is called as sales 400, in this particular case 400 out there. Move on further, 23rd transaction, I got another 1, 2, 3, 4, 5, 6 transactions. I will finish these 6 transactions as of now, and then maybe we will take up the balance sheet and P&L in the next few minutes out here. It says paid office rent rupees 150. When you pay office rent, what happens? What is the entry? What we say? Office rent account debited, that is debit all expenses and losses, and then to cash. Cash is going out, that is cash is credited by office rent rupees, what is called as office rent is 150. Now, I can open another account out here, what is called as my office rent account. I will say office rent account has been debited to cash rupees, what I call it as rupees 150. The next 24th transaction, if you see this, paid for office salaries rupees 250. What is the journal entry we said? We said that what do you call it as office salaries account debited to cash account. Now, office salaries account, I open another account out here, office salaries account debited to cash. How much is it? It is about 250. I go to my cash account out here and then I will say buy office salaries 250. Please note I have got my Excel out here and I will post this Excel. You can just verify all these transactions as after we finish this particular aspect out here. Further, 25th transaction, last 3 transactions out here, paid for general expenses rupees 25. General, what is a general expenses account debited to cash account. Cash is credited by general expenditure rupees 25 out here, and then open another account, that is what is called as general expenditure account out here. General expenditure account has been debited to cash rupees 25. Next I say 26th transaction out here, purchase goods from Abidali rupees 100. So what did we say that in this particular case the transaction that we had was purchases account debited to creditors account out here, purchases account out here. I will say I go to the purchases account debited to creditors account out here. My purchases account out here has been basically debited to what is called as my creditors, in this case Abidali, that is 100 out here purchase account, and then I go to my creditors account out here. Creditors account has been credited by purchases to the extent of what you call it as 100 rupees out here. Next transaction, withdrew from bank for personal use rupees 500. Bank balance is reducing in this particular case. Moment I say bank balance is reducing, that is drawings account debited to bank account is what we called. Bank account has been credited by drawings about 500 out here. I can open another account out here. In this particular case I can open an account, what we call it as, I call it as drawings account. Drawings account has been debited to bank account, that is what is called as about 500 in the process. Last transaction what we have, bought stationery for cash. When I say bought stationery for cash, the entry was stationery expenditure debited to what is called as cash account out here. Stationery expenditure debited to cash account. Cash account has been credited by stationery expenditure account, that is stationery expenditure account, that is again $25 out here. I will open a stationery expenditure account out here, and stationery expenditure account has been debited to cash rupees 25 out here. Now that brings me to the end of all these transactions. All that I have to do is I need to know what is the balance of cash, what is the balance of bank, what is the balance of debtors, etc. All that I need to know what is the balance of debtors. I have, every time there is an increase in debtors out there, my debit balance will increase. Every time there is a reduction in debtors out there, my credit balance will increase, my credit balance will be there. So the net of these, if I have to say what is my total debtors at the end of this particular period, my total debtors on this end of this particular period is 680 plus 20, 700, 700 plus 500 is that 1200, 1220. That is, this is 1220, this is about 1700 minus 1220, that is this total is about 1700, and then 1220 if I sort of reduce out here, that means 480 is the balance carried down. That is, if I say today what is my total debtor balance out here, my debtor balance in this particular case at the end of this particular period is rupees 480 is what will go to the balance sheet. I think I am right with the total. Can you just check the total, sir? 680, 700, 700, my total is correct, my total is correct out there, my total is correct in this particular case out there. Now what is the discount out there? If I say discount, I have sort of received, I have sort of given out there. I have given $30 discount, I have received $10 discount out here. My discount balance that I am carrying it down is $10 out there, that is my account is balanced. This is what is called as the net discount income minus discount income minus discount expenditure. This is what is my net discount what I am incurring out there. Yeah, that will go to the profit I mean we will go to the profit and loss or through the balance sheet, either way we will looking at it. Now if I have to move further in this particular case, let me say what is the bank balance I have. My bank balance I have, what happens every time there is an increase in balance it comes on the debit side, every time there is a reduction in the balance it comes on the, what is the net amount that should be there in the bank. Net amount that should be there in the bank is 3500 minus 2500, the net bank balance, that is balance carried down in this case will be 1000. As of today my bank balance should be rupees $1000 out there. All I have done basically is I have consolidated all this account, I will know what is my total purchases or what is my total bank balance. What is my total purchases? My total purchases out here is 2900 plus 200, 3100 plus 300 is 3400 plus 100 is 3500. My total purchases is 3500 out here. If I have to say that it which will go into my total purchases, if I have to account, that is basically nothing but I just total all this during that particular, imagine that all the transactions happen over a period of 1 year or 1 month whatever. What is the total consolidated purchases during this year? All I have to do is I have to just total out there. So like that similarly you can do for all these basic transactions out here, all these basic transactions. Let us take cash itself. Cash itself, all this is cash inflow, all this is basically cash outflow out here. Your cash inflow is 10,700 plus 680 plus 900 plus 375 plus 1000 plus 400 minus all this is the net cash balance what you have. You can do all that as we go along. Okay. So now we will sort of look at balancing, finding out this, taking it to the P&L and then the balance sheet. That is the next two things what we will do in the next class out there. Thank you.